Oh man, so bears respond as Bitcoin and crypto markets face a critical waypoint. I'm going to be sharing the exact level in the chart here that Bitcoin finds itself at. It's no surprise that this is a key and challenging level. I'm going to share with you the weekly chart, the daily chart, and also what I'm seeing happening on the shorter time frames, because I did mention that this was a critical levels, which until we overcome, I bring up the EMA ribbon again, until we overcome it, we are not officially in a sideways market nor a bull market. We continue to be in the claws of the bears. As always, don't forget to smash up likes, don't forget to subscribe. This video is brought to you by NordVPN, but more about that later. We're going to get straight into the charts here because Bitcoin is running into a key horizontal level. I'm going to simplify this a little bit. I'm going to pop off the EMA ribbon. I'm going to do this with you guys so you can see exactly what I'm doing. I'm going to switch this over to a line chart. And what do you see when you simplify this? You see that we're running up to key horizontal level, which is where we got rejected from here, right? 24,000. That was the level that after the Terra Luna collapse, we fell all the way down to these levels. We then bounced straight back up here, up to 24,000, and then got sharply rejected again. When you then layer on that EMA ribbon, what else do you see? We're running into our EMA ribbon. Let's bring back the candles, and you can see we're running into this EMA ribbon. It's a difficult level, and until we break this weekly EMA ribbon bullish, which is above that 25.6 level, we are not out of the woods. Now, the last week, which we saw was a red weekly candle, shows that the bears are responding. They're awake and they're trying to hold on. They're not just going to let go and let us turn this trend, which has been a bearish trend for a very long period of time. They're going to have their last stand, and that is why this is a critical level. Once we clear this level, which is where my cursor is pointing right now, that 25,000 mark, and we get past it on the weekly time frame, look at the gap we have to fill. This fell so quickly. I've said this so many times. From 42,000, we fell violently all the way down here to 17,600, okay? So it's imperative that we understand that once we clear the volume here, things will and can move quite drastically, but this is the level that the bulls and the bears will be fighting for. Let's turn off the EMA ribbon. I'm going to back this up a little bit by bringing out the VPVR. What do you see there just above my head? You see that there's some serious volume trading at these levels. And the last of the major volumes comes at around 24,500, which is exactly where on the weekly time frame we're getting this resistance coming in. It's a little bit of a hard level. Yes, we had a nice run up from the bottom up to here, but that's a bear market rally. This next phase is going to be far more important and more relevant in terms of where we're going to go in 2023 than the run-up we've just had at the start of January. It's been a fun run-up to January, but there's a lot more work to do. If we can clear this level and get to the less traded volume areas, we can start to fill the gap a little bit more strongly, and then more major resistance starts coming in around that 38,000 mark. So very critical level. Be very, very careful. Don't be chasing those green candles because the bears are still alive and kicking. We cannot be reckless and just say, oh, they're done, we're through. No, they still own the weekly time frame. Now, if we pop that up to the daily, then you understand why people are really happy, right? Because you're looking at the daily time frame. We've had an amazing run up here. But again, what are we seeing? We're seeing a little bit of a cooling off. Again, nothing wrong coming into its EMA ribbon. Nothing wrong even testing the EMA ribbon into the depths of it, right? Even coming down as low as here. I know it's not ideal, but 20,500 is still holding just about, but holding your daily EMA ribbon. Let's then layer on some of our horizontal supports and resistances. What do we see? Well, what we see is we're coming down to a critical level, this top of the green channel. If you guys have been watching this content for a while, we've been characterized by being in between these two levels. Look at this horizontal all the way there. Look at this horizontal all the way there. This is a very important channel for us. And now, when we broke out, we could expect a retest. But the key level is, will we see support coming in from 22? And then we can set ourselves up for a nice bigger move. But that support needs to come in from 22. If not, we're back in the channel and a lot of this hard work was undone. We're back into this sideways channels and the bears are showing strength and we need to pay respect to those bears, okay? So very important level. Hold up, are you tired of worrying about the security of your cryptocurrency transactions? In this crazy world that is crypto, protecting and preserving our digital assets is everything. And for that reason, I partner with NordVPN, the best VPN service for crypto traders. With NordVPN, you can be sure that your online transactions are completely secure and your identity is hidden from prying eyes. Their military military-grade encryption technology makes sure that no one can access your data, even on public Wi-Fi networks, so you can trade with complete peace of mind anywhere, anytime. Guys, seriously, don't risk your hard-earned crypto and NFTs for the price of a coffee each month. They've also offered a free month and up to 60% off their plans. Oh, and they've got a 30-day money-back guarantee. Guys, seriously, it's a small price to play for a rapid, safe VPN. Definitely check it out. Links in the description. Ijaz.uk/NordVPN. And let's get back into this video. Now, what's causing some of this pain in the market? Well, there's a lot of uncertainty going on, right? You got Fed Chairman Jerome Powell speaking on Wednesday. You got the Fed official Williams speaking as well. We know we had the non-farm payroll miss on Friday. That's upsetting markets as well. Various companies are producing poor earnings. And we're seeing that is now relating to some risk off, just slightly, some risk off appetite. You're seeing the US 10-year yield here having two really strong days, right? On Friday, it was up 3.86%, and today up another 2.3% at the time of recording this video. So this is starting to show that people are flocking a little bit back into the US dollar. The dollar index is holding up another green day as well. But again, let's bring out the EMA ribbon. It's running into our EMA ribbon, the exact opposite and exactly what we'd expect. Remember, Bitcoin and the dollar index are inversely correlated. If the dollar index is running into its EMA ribbon, that means Bitcoin's testing its EMA ribbon from the top side down into the EMA ribbon, which is exactly what we were seeing there on the daily chart. So this is very important to watch. We do not want the dollar index to try flip its daily EMA ribbon bullish. We need to push it straight back to the downside. That would mean Bitcoin can bounce from its daily EMA ribbon and we can move to the upside. Now, another interesting thing to take a note of is let's jump on over to crypto market cap here, because what I wanted to share with you here on CoinMarketCap is I just wanted to look at what we've just had. Now, on the 30-day time frame, which obviously covers most of January there, everything is really nice and green. But you need to start looking at which coins have not moved and ask yourself two things. Either one, do I think they can potentially move soon and therefore it's an opportunity? Or am I holding an altcoin, which perhaps I shouldn't be? Like, how can we have a crazy January and my altcoin is just like dead, it's not alive? So the first one you see straight away is XRP. Over 90 days where Bitcoin is up 15% now, even with this little bit of a pull down, and really on 30 days it's up 35%, XRP is down 9% over the last 90 days, over the last 3 months. If you held over the last 3 months, you're down almost 10% on XRP. Now, we know the situation with that. I don't cover XRP a lot, so I don't claim to want to cover that off a lot. There's a lot of channels that will cover that off for you if you're interested. But you got to understand it's a bit of a roulette play, right? It's to do with the SEC case, and therefore, you know, that you're not going to see the natural running behavior with XRP. Go down furthermore, you're seeing Dogecoin. Again, if I was a Dogecoin holder and a huge Dogecoin holder, I wouldn't be too concerned because Dogecoin falls out of the pattern because it can just move when it feels like, when there's social momentum behind it. It's a bit more of a meme coin. Then you look at Solana, down 17% over the last 90 days. Again, you understand what happened, right? You understand what happened because of the whole FTX drama and the issues that ensued, but you probably have to ask yourself, wait, if layer one solutions are really skyrocketing over the last 90 or so days, well, more so in January, and you're seeing the likes of Phantom and then even stuff like Aptos, which is a bit of a ghost chain, really moving in crazy amounts, will something like Solana be able to bounce? That's a question for some as well. I look at something like Polkadot and see over 90 days, we're only up 2%. I look at something like Chainlink as well, down 20% on 90 days. And these are two what I call blue chip coins. So I expect these to have some sort of momentum run at some point. They're not moving in line with the market. And I know sometimes they fall under the radar, they're less exciting, they're not the 100x gem that everybody's looking for, but these are staple projects that I think will definitely bounce back and have their moments in the light as well. So interesting exercise for you guys to do. Definitely put this on CoinMarketCap and just look at, you know, when Bitcoin's had such a nice move to the upside, which altcoins are not keeping up. That can give you a clue of one, an altcoin that may move soon because it's not had its chance yet, or two, maybe there's something wrong with that coin that is trying to give you a red flag, say, oi, watch out, markets are moving, this coin's not moving, maybe something is going on and the market knows something about it. Fiat and greed index is sitting at 56, just notching down slightly. Last week we did hit that greed territory in 61, but still the markets are a lot more comfortable than they were just a few months ago, right? We really did have some pain around the FTX saga, and now you're seeing that markets are starting to recover, but we are at that critical level. We're at that critical juncture, and I want you guys to really pay close attention to where we're at on this chart and respect the fact that we are on the weekly time frame here still in a bear market rally. Okay, we are running into our weekly MA ribbon. I've held this throughout January. You can go watch any of my videos. I'm not somebody that's just flip-flopping and saying, oh guys, you know, the bears are now alive. No, We are enjoying this rally. We take advantage of this rally. We trade this rally. We're in the market for this rally because I did not want to miss out on 150% on some altcoins and Bitcoin moving as well. I'm not missing out on that. But I respect the fact that the bears could come in and show us a little bit of a challenge around this area. But I want to win that challenge. I want to win this challenge because the next move is going to leave this last move we've had and make it look like a tiny little appetizer. This next move will be far more exciting because we've got a huge gap to fill. And I want to be in the market. I don't want to be that guy that's on the sideline saying, oh, this scared me where the bears stepped up around 24 and pushed us down to 20. No, I want to be in the market. I want to take advantage of that and move to the upside along with it. Okay, so I want to share with you this important pattern here on the 4-hourly chart. Remember, I said we are in this ascending, broadening wedge, which can play out in both directions. If we can break to the upside, fantastic. That will give us a move up towards that 25,700 level. But they can also break to the downside. Look at this example I've given you here from a screenshot. I think it's from gold or something. And it moved and we broke down from the ascending, broadening wedge. And that could be happening here as well. We're getting a little bit of support here on the 4-hourly time frame. You see a few green candlesticks trying to bounce from the bottom of this channel, but we have to see what happens here. Do we break to the downside? Remember, don't fall for any fake outs. They can sometimes happen like this, right? Where you get a little bit of fake out, it comes back in, comes somewhere about here, and then you'll see the next leg push it to the downside. This is an ascending, broadening wedge. Again, if none of these patterns make sense to you, ijaz.uk/TA. I put my TA course out for free. Over 10 years of experience from traditional finance and investment banking and everywhere else that I've learned TA in a professional manner, I've put it all in there from beginner to intermediate. There will be another free course for advanced TA as well, but definitely there's a lot of advanced concepts in there. So even if you know your TA, definitely check it out. It doesn't cost you a penny. Link is in the description. Okay, guys, so make sure you're looking out for Fed Chairman Jerome Powell's speech. That is tomorrow at 12:40 Eastern Time. I don't know whether I'm going to be streaming or not, but stay tuned on the Twitter and in the Telegram, so I'll let you guys know if we're streaming it. But either way, I will be coming to you if there's anything meaningful coming from that. But just know that he can move the market. Other than that, nothing major coming this week. Just a few other Fed officials speaking as well. And then on Friday, we do get our Michigan consumer sentiment. Remember, that's still important. That gives us a sentiment of, does the average public person expect inflation? Because it can become a self-fulfilling prophecy. So we want to see that coming at a sensible level where people think inflation is starting to come down, and that can reflect behavior as well. Apart from that, you see pre-market here in the red. NASDAQ down 0.8. You're seeing S&P down 0.6 and the Dow Jones down to 0.5 here. I will be looking at this week as an opportunity to buy the dip on certain coins, right? If I do see meaningful retracements in any of these coins, I will be looking for it. And my rule of thumb, because a lot of people ask me, where do I want to buy? My rule of thumb, and it is just a rule of thumb, is trying to get to its EMA ribbon. So for Bitcoin, around that 22,000 on the support level here, I'll probably look to nibble a little bit. The further we fall, the bigger bites I'll take. If we get another chance close to 20,000, definitely I will be nibbling up a bit more bigger chunks. And similarly on some of my favorite altcoins, Phantom's another one a lot of you guys are asking about. Yeah, I mean, this is relative to where you're at. Do you have enough in your portfolio? What's your allocation? My Phantom position after this run up has become a big part of my portfolio, bigger than the percentage I already allocated. So for me, I'm going to be a little bit more fussy on my entries. I'll start nibbling the closer we get to our EMA ribbon. I'm looking at that 47 cents mark. And then if we're lucky, and it may never happen, but I'm okay because I've got enough in my portfolio. If we come into the middle of the EMA ribbon of around 42 and these levels, then I'll be buying more meaningful chunks. I'm certainly not chasing the green candles. Yes, it's much better now that we got some red and you're buying on the pullbacks. And a lot of people are panicking unnecessarily. This is a coin that's run up from the 19 cents range up to 65, and it's just chilling out here at 55. It's showing good support, in fact, here at 55, and it's just waiting for Bitcoin and the wider markets to show some direction. So the scenarios I played out in Bitcoin, if they play out to the downside, do not be surprised to see Phantom want to come down and even come down as far as 38. I know that sounds crazy, but when you've had such a crazy run like that, I don't even think that's a bad thing to come build some support and get yourself ready for your next run. So there you have it, guys, an update here on this Monday. It's going to be an interesting week, potentially a red week, but we stand ready to buy the dip if we get some meaningful pullbacks. If we get green in the market and the market kind of wants to be choppy and tailored this week, then absolutely fine. Let it do its thing. Hope you guys enjoyed this update. If you appreciate it, smash up the likes. Don't forget to subscribe. Check out this video here, and I'll see you in the next one.